right, it is October 22nd. This is our test review, and I believe we have questions. So, what are your questions?
So could we please go over the trial balance? Um,
Sure.
Making the trial balance. I remember there was something I messed up on the quiz, our last quiz, and I think it was regarding the trial balance.
Okay. So, for the trial, about you want to go over how to do it?
Yes, please.
Okay. So, I think there's a problem on that, I believe, but I could be wrong. And then we also want to go over the essay because I think that would be helpful. Well, I thought there was a trial balance in here. Did I miss it? Here we go. All right. So we have a exercise 6. We have a scrambled list of accounts, and your job is to create statements from this. Okay. All right. So I'm going to split my screen in the hopes that you can see two things. But and then I'm going to open up an Excel file. And all right. So what I like to do with this problem is my first thing I like to do, and it's a little tricky to do on this, but yeah, I can do it. Let's see. Okay, so I'm gonna, right. So the first thing I want to do is just take a look at these accounts, and I want to think in terms of what category are they in? Are they an asset, liability, stockholders' equity, revenue and expense, or a dividend? Okay, so let's just do that. And then if you tell me, well, let me back up again and go on to my Excel sheet. So I'll tell you where this is all going. So I always like the accounting equation as part of this part of the course. I just like super hammering it. All right. So let's make sure. Okay, we're good. All right. So let's just put the accounting equation here. Assets. I'm going to put the equals right there. Lives plus stock equity plus revenue minus expenses minus dividends. Okay, so that's our accounting equation. And then before we go to that trial balance, I want you to tell me what statement assets are on. Balance sheet, income statement, statement of retained earnings, or none.
Balance sheet.
Great. Liabilities,
Balance sheet. So
great.
stockholders' equity.
So stock.
Um, do you want me to say revenue and expenses as well?
Let me label that. So we'll
Okay.
just say hi Ashani, balance sheet. Okay, we are recording, just so you know. And then revenue and expense, what are they on?
Income statement.
Okay, so we'll label that. Okay. And then dividends, what are they on?
Retained earnings.
Great. Okay, they don't show up on income statement or balance sheet. They're all only on retained earnings. Okay. All right. So now let's go back to assets. What's an asset's normal balance? How do you, so let's give me a common asset.
Cash.
Cash, easy one, right? Everybody knows that one. So under assets, we'll have cash. And that's always going to be listed first. Assets are listed in order of liquidity.
Mhm.
Okay. And then I'm just gonna put it like that. Maybe then you'll only see me. So if I increase cash, do I debit it or credit it?
Debit it.
Perfect. Yes. So normal balance for cash is a debit, and that just means left. Okay.
Okay.
And we use that when we make, let's do this. If we said, let's make a T account for cash. I'm hoping my new computer has a stylus. Okay. Let's make a T account for cash. Okay. So if I said debit cash $200, you would put it on the debit side, the left side. So debit is just another word for left. If I said, let's make a T account, let's just copy that. Let's make a couple of T accounts. For accounts payable, okay. So,
You
so where would accounts payable go in this list? What kind of account is it?
so it's a liability, and you would debit accounts payable and then credit cash.
Okay, so let's do this. Make them a little wider. Okay. So let's make a third T account over here. Make these a little smaller. Okay, let's make this one common stock. Okay, so let's say the stockholders invested $20,000 in a company. Okay, the company would record getting the cash. So give me the journal entry for that.
So you would put we said 20,000.
Yeah,
20,000 debited for cash and then 20,000 credited for common stock.
excellent. Okay. So 20,000 debit for cash and 20,000 credit for common stock. So what's the normal balance for common stock?
Uh, can you define, oh, do we just say credit? Is that what you mean? Like normal balance
Yeah,
is the thing we
that's a
put on
great
top?
question. Normal balance means how do you increase an account?
Oh,
So the normal balance for cash, we just increased cash.
yeah.
Now, you're doing the books for the company. So when the stockholders invest 20,000 into the company, for the company, cash goes up.
Mhm.
But also now its stock goes up. It means it now has owners with an ownership position of $20,000.
Mhm.
So stock goes up with a credit or debit.
Uh, Credit.
Yeah, and here's a little tip to remember that. Debit is on the left, assets are on the left side of the equation. Debit means left. Liabilities and stockholders' equity and revenue are on the right side of the equation, and that's credit. Credit has an R in it.
Okay.
So we increase liabilities with a credit, we increase revenue with a credit. It doesn't mean it's good or bad, it just means the normal balance. Okay. When it comes to expenses and dividends, they're also on the right side of the equation, but we have this minus here and minus here. So we reverse it. And so it's a debit. Okay. All right. So let's do this. Okay. So stockholders invest 20,000 in the company, debit cash, credit common stock, they both went up. So
Mhm.
the ups and the downs don't have to equal, but the debits and the credits have to equal.
Okay.
When I put this hand up, what do you see, left or right?
I see your left. So I think about debit.
Okay. All right, I'm gonna fix something. It just drives me nuts. I think I'm mirroring my image. Okay, we're gonna try that again. Okay. When I put this hand up, what do you see?
I see your right.
And this,
Left.
okay, all right. So it's still mirror image. All right, that's fine. I'll live with it. Okay. I got to make sure I'm like a yoga instructor. I got to reverse it. All right. So now let's say the company bought supplies. Change this. let's say the company bought $900 of supplies on credit. Now there's that word credit again, which is confusing, but it means you buy now and you pay in 30 days.
So we would put $900 on the credit side of accounts payable and then 900 on the debit side of supplies.
You're absolutely correct. Why debit, why credit? Give me the
Uh,
rule. Just give me the rule. So is it
because debit is the things we already have, and then credit is what we have to give.
not
Uh,
quite. So supplies is an asset,
okay.
okay? And assets go up with a debit. That's what I mean by rules of debit and
Oh,
credit.
okay.
So here's the rules. How do you increase these accounts? Well, if you're an asset, you debit. If you're a liability, you credit.
Okay. Okay.
So
Now I
that's the
understand
rule.
what that
Okay.
means.
I
Okay.
know. It's like, what does she mean when she asks these crazy questions? All right. So supplies went up, an asset went up, so we had to debit it. A
Mhm.
liability also went up, but it's a liability,
So
so
we have
we
to credit it.
credit it. Yeah. We followed the rules. Okay, now I'm going to pay that off. It's 30 days later. I'm going to reduce that. I'm going to pay that bill. So I
Okay.
have the word pay in there, which means cash.
So we would credit $900 for cash and debit 900 for accounts payable.
Absolutely. So following the rules of debit and credit, I reduce cash with a
Okay.
credit. I reduce accounts payable with a debit.
Okay.
Let's do one more and then we'll go to the trial balance.
Okay.
I'm going to put a revenue account in here, service revenue. Okay, so now I'm gonna do one more account. I'll move this guy down. Okay, so we've gotten the accounts payable transaction. Now I want an accounts receivable transaction. All right, so I'm going to give you two transactions. This company cleans houses. This company cleaned a house and it was a big mess and they charged $500 and the owner paid them in cash. Okay.
Mhm.
So they earned $500 for cleaning a house and they were paid in cash on the same day.
Okay. So we would credit service revenue 500 and then debit 500 cash.
Start, I think so. Can you repeat it?
So we would credit service revenue for 500 and then we would debit cash for 500.
Good. Okay. And so when you're writing these journal entries, I want you to always list the debit first, then the credit.
Okay.
Okay. That's why I was like, oh, that's right. She's listing that. Okay. All right. They clean their regular person. They clean it weekly, and that person pays them at the end of the month, mails them a check for the whole month. So they did the weekly cleaning and it's $200.
Okay. Um, it's the end of the month, right? It's already the end of
No,
the month.
no, just one
Oh.
week has passed.
Okay, so then
They get to call it a sale because there's been an exchange. They clean the house.
okay, so we would debit accounts receivable for 200 and credit cash for 200.
They didn't get paid, but
Oh, and we would debit credit service revenue for 200.
that's it. Okay, you got it. Okay, so that's what I'm talking about. No, start with what you know. Did it go up or down? And then apply the rules of debit or credit. Okay.
Okay.
And start, I always say for journal entries, always ask yourself, was cash involved? Because that's the easiest one to remember.
Okay.
If cash is involved, did it go up or down, debit or credit? Okay. And then be comfortable with accounts payable, accounts receivable, so you know which way they go.
Okay.
One is normally a debit. One is normally a debit, accounts receivable. One has a normal balance of a credit. That's accounts payable.
Okay.
And so, all right. And then the way I set it up when you guys played Monopoly, let's go look there. Where did I put Monopoly? It must be. See if I can find it. Not today, I can't. Let's go back to the regular Monopoly. Hang on. Let's see. There we go. All right. So if you look on your Excel spreadsheet for Monopoly, you, it's a little big here, but you can see the rules across the top and then the example accounts there. I know you can't read it because it's small on your screen, but that's what I was trying to show you. So, okay. I guess I could do that. Yeah, there we go. There we go. Ooh. So think in terms of rules of debit and credit, all of that. Okay. All right. So back to the trial balance. So I want you to come over here and then say salaries payable, we know it's a liability. And my question is it think of the classified balance sheet, is it a current liability or is it a long-term liability?
It's a
So the difference is if your company owes money, if the company owes money to its employees, would it owe money to its employees for longer than a year, or would it just be for a few weeks?
it would probably it would probably be for a few weeks because
Yeah, no employee would continue working if they were paid annually. That'd be horrible. So
so it's a current liability.
so we'll do like that. And so that's what I'm saying. Just do something like that before, because when you arrange your trial balance, it has to be in order of
Mhm.
liquidity. So if you go back to a really good resource is go back to your Wiley course. I'm assuming you can see me when I'm changing
Yeah,
screens.
yeah, yeah.
Okay,
I
all
can
right.
see everything.
So we'll launch the textbook. And this is super helpful. If you have access to a printer, I would say print out this. What I'm going to show you is under chapter 2. It's under classified balance sheet. Okay. And we'll close the table of contents. And there is a beautiful example here. I think I held it up in the last couple of weeks. And you have order of liquidity here under current assets, long-term investments, property, plant, and equipment, intangible assets. We know there's more accounts under these categories, but that gives you an idea of the order of liquidity. Current liabilities, long-term liabilities, stockholders' equity. So it's a real good resource. Okay. All right. So back to this salary expense. What kind of account is that?
It's an expense.
Yeah. So I'm just going to put an X there for an expense. Same with utilities. Now, what about equipment? What kind of account is that?
It's well, would we put it under property, plant, and equipment, or would we just say assets?
It is an asset, and you're right. The category would be PP&E, property, plant, and equipment.
Okay.
Okay, I'm just going to put it there for our reference. And I'm going to put PPE here, if it'll take. Let's see. And I'm not going to save this, so I'll just, when we're done, if you want to take a picture, you can. All right, accounts payable.
Current liability.
Great. Okay. Commission revenue. Okay, now let's back up. This is a company and they're not calling their revenue service revenue. They're calling it commission revenue. In your head, just think service revenue.
Service revenue.
So what kind of account is this?
It's just revenue.
Just revenue. And
So is rent revenue.
rent revenue is revenue. And common stock is what category?
Stockholders' equity.
Yeah. And you notice in the classified balance sheet, we don't do anything special under stockholders' equity.
Mhm.
Note payable long-term.
Long-term liabilities.
Yeah. LTL. Whoops. I got cash. You know where that goes. That's a
Asset.
current asset. Accounts receivable. We did that. That's a current asset. Now, accumulated depreciation is a contra asset.
Contra asset.
And that goes with equipment. We have equipment less accumulated depreciation. So it's under property, plant, and equipment.
Okay.
And what you need to know is because it's a contra asset, assets normal balance is a debit, a contra asset's normal balance is a credit.
Okay.
Dividends is a dividend, depreciation expense.
PPE.
Nope.
Oh.
Depreciation expense.
Oh, it's an expense.
Yeah.
I think I just put depreciation expense together.
I know, and they're different. They're totally different. Okay. Retained earnings is going to go on the balance sheet under stockholders' equity. Okay. Now, we're not making a balance sheet. We're making a trial balance, or actually we're making balance sheets, but let's make a trial balance first. Okay. So, because that's what you asked.
Mhm.
All right. So let's do a trial balance. And we'll make it smaller. And so you set up a trial balance just like you would set up. Let's get rid of this so we have a little more room. Okay, you set up a trial balance just like you would any other statement. So we'll say trial balance. Well, no, we'll say company name, trial balance. And the date is at year end 7/31/2011. And the trial balance is as of, okay. Oh, Ishani, did you have any particular questions or is this good what we're doing now?
It's good. I just had questions about my Monopoly and then the essay questions. You said you'd review
Yeah,
it
yeah,
today.
yeah. We'll go over that. So I want to get, I'll finish the trial balance and then we'll go to the essay. All right. So your job is to organize this in order so that you can make the trial balance. And so all you do with a trial balance is you list the account. We'll make this a little wider. And then you list its balance as either a debit or a credit. Okay. And your job is to make sure you have it in the right order.
Mhm.
Okay. Make sure I get this right. Here we go. All right. So if we go back and look at that Franklin balance sheet, which will help us, that will help us with the order. Cash, accounts receivable, supplies, and then prepaid.
Mhm.
Okay. So we do have a cash account. It's cash, and we do have accounts receivable. And I don't see any other current assets. Okay. And I'm
And then
not going to put the dollar amounts there yet, but so after cash and accounts receivable comes
PP.
PPE. So we're going to say equipment. And you'll notice I'm not saying assets, liabilities here on the trial balance. I'm putting the actual account title.
Mhm.
And we have accumulated depreciation. That's also PPE. Okay. And I don't see any other asset accounts. Okay. So now we'll go into liabilities. Let's go back and look at that Franklin. And under liabilities, we have notes payable, accounts payable, unearned revenues, salaries, and so forth. Okay. So we have salaries, we have accounts payable,
And notes payable,
and
but
notes
that's long
payable
term.
long term. Okay. So we're going to put accounts payable, salaries payable, and note payable. Okay. And then we go to stockholders' equity. We have
Retained earnings.
common stock. Here we go, down here. And retained earnings. Okay. And then between the balance sheet and the income statement, we usually put dividends. Okay. And now what's left are the two revenue accounts. So we have commission revenue and rent revenue. Okay. And now we just have a bunch of expenses, and you're just going to list those in order. So salaries expense, utilities expense, depreciation expense. And I think that's all. So we have 15 items, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay. And then here we're going to put total. Okay. So let's expand this a little bit. We'll take this just so it's a little bit easier to read. Okay. All right. All right. Now we're just going to lift. We're just going to lift the balances from on the other side. So I'm going to do this fast, 9,200. Maybe fast, maybe not so fast. 10,000, 19. Now, when I get to accumulated depreciation, I want to make sure to put that in as I'm just highlighting it. You wouldn't. I want to make sure to put that as a credit. Okay. And then accounts payable is going to be a credit. And the trial balance, this list of numbers doesn't tell you whether it's a debit or credit. You have to know, and you have to remember your rules of debit and credit. Salaries payable, note payable, common stock, retained earnings, beginning of year, dividends, commission revenue, rent revenue, and now salaries expense back over on the debit side. And so we've got lots of salaries and
Wouldn't
depreciation.
dividend be debit?
Where did I put it? Oh, great. Thank you. Dividend should be a debit. Good catch, Ashani. All right. Now I'm going to hope and pray this thing balances. Okay, so I'm going to take, I guess I have to leave it small. I have to take this and total it. And it's not the end of the world if it doesn't balance, but let's hope. Yay, it did balance. Okay. Okay. So the important thing about the trial balance is you have to have it in order of the accounts: assets, liabilities, stockholders' equity, revenue, expense. Okay. So these are all assets. Let's just color code them. These are all liabilities. This is all part of stockholders' equity. This is revenue. And these are expenses. Okay. So if you're doing statements from here, you have to know, which statement comes first. That's the income statement. Then you'll calculate net income. Then you'll do the retained earnings statement, and then you'll do the balance sheet. And you can see the solutions in the practice exam. But I think for this part, it's good to just kind of lay all that out and then show how it balances. Okay.
That makes a lot more sense. Thank you.
Oh, I'm glad. Okay, great. All right. So let's talk about the essay questions. All right. And then I'm not gonna save this because I don't want all those clues in there. No, I'm not saving that. Okay, let's go back and download it again. Don't want that. I want to download it. Actually, let's just do this. And for the essay question, it's you can see the solution, but it's just super straightforward. And I want to teach you talk a little bit about the concept of growth rates. So let's get this. I'm going to put them both up. Okay. Okay. So first off, I want to talk about the concept of growth rates. Can you see my Excel file?
Yes.
Okay. So what is growth rates? So growth rates, so if I said to you, TY, which means this year, LY, which means last year, okay? If I said to you, at the end of the year in December, I was making $10 an hour. My boss came up to me and said, Judith, you've been doing a great job. Starting January 1, you're going to make $12 an hour. My question to you is, how much did I earn? What kind of a raise did I get? So, and I want you to say that in terms of a percent. So take a minute and tell me that.
Did you get a $0.02, I mean 0.02% raise?
Tell me how you got it.
I just subtracted 12 minus 10 and then divided it by 100 to get the percent.
So you said 12, I got a $2 per hour raise. And my question is, what percent is that? How much did I get?
Um,
So the name of that is a growth rate. What rate of growth did my salary go up? Okay. And so go ahead.
I mean, I got it as 0.02, but I might be wrong.
That's it. Go ahead.
Would you have to do 12 minus 10 divided by 10 and then
Yes.
multiply by 100?
Yes. So the formula for growth rate is this year minus last year. Let's do caps because they'll show up a little better. This year minus last year divided by last year, and then times 100 to make a percent. Okay. So let's show what that would look like. That would look like 2, which is this year minus last year is $2 divided by last year. Okay. So if you put that into your calculator, you're going to get 0.2000. Okay. And then if you multiply that by 100, you get 20, and it's 20%. Okay. It's not going to show, but so this year minus last year divided by last year times 100 is growth rate. So we are looking at companies' data. So let's go to the problem. We're looking at a company's data, and I'm saying, write me an essay. Give me a thesis statement. What is the trend? Give me evidence to support your thesis. Use numerical evidence and percent growth rate. And that's just a one-sentence summary. All right. So let's start with net income. I want you guys to calculate the growth rate. Can you see these numbers clearly?
Yes.
So this is 2011, 2012, 2013, okay? So I want the growth rate between 2011 and 2012. Can you give me that? Take a minute and calculate that.
I got negative 33.80.
You walk me through your math. So that
Um,
we started at 121,000, now we're 184,000. So
wait, which one's the last year again?
so that's a great question, because if you get it wrong, you'll get a backwards number. This is most recent, 1 year back, 2 years back. So I'm asking for the growth rate between 2011 and 2012.
Oh, okay, I did it wrong.
Did you get it, Detef?
Yeah, I did.
Put it in the chat, direct message me.
Sure.
That's great. So I want you to add 2 decimal points. So look at your calculator before you hit times 100. Yeah, that's good. Okay. All right. So Miss Shawnee, you take this year, the current year, 184,063 minus last year. And the dollar difference is 62,216. Then you'd take the 62,216 and divide it by last year. You get a great big long decimal. And then you say, I want to do this. Let's do this. That's good. That's what I want. Okay. Take this number times 100 and you get, why did it do that? Oh, did I mess that up? Take this number and turn it into a decimal by multiplying it by 100, and you get 5106. Okay. So the growth rate between 2011 and 2012 was $62,216 or and 51.06. So it was a pretty huge growth rate, 51%, okay, for net income. If you did it again between year 2012 and 2013, you'd say 270, 556, 184,063. You'd subtract and you'd get 86,493. And then you'd say, take that 86,493, divide it by last year. You'd get 46991 or 46.99%. Okay. So you need to be able to calculate the numeric growth rate, dollar growth rate, which we have here, and the percent growth rate. Okay. All right. So my question is, if this was the first year and you grew at 51%, and the second year you grew at 46.99%, in one word, can you tell me, is this trend favorable, unfavorable, or neutral?
What does favorable and unfavorable mean in these terms?
So is it good news or is it bad news? So the trend is year one, we grew by 51%. Year two, we grew by 40, almost 47%. Is that a favorable, good trend, or is it bad news?
I mean, but like money-wise, it's increasing, but then growth rate-wise, it's decreasing.
Excellent. Yeah, no. So overall, the growth rate is decreasing. However, it's a really big growth rate. So let's look at the solution now and see how we use this data. Okay. Let's see if I can. So we have four pieces of data. We have 2012 compared to 2011 in dollars and in percent, and we have 2013 compared to 2012 in dollars and percent. Dollars went up. Percents are really, really high. I mean, no company can sustain this high levels of growth. But you rightly noticed, Shani, that the growth rate went down. Okay, so let's look at the solution. And this is what first you have to calculate the dollars and the percent change. And then let's look at the solution and say, what do I want? So I want so we're looking at net income here, and you'll see those numbers again. Name the company. Coldwater Dairy experienced significant improvement, favorable improvement in the 3 years. So you want a statement like that. That's your thesis statement. Now give me your evidence. Net income increased 5106 in 2012 compared to 2011, an increase of 62,216. The company continued this improvement in 2013 compared to 2012, with net income increasing 46.99% or 86,493. Okay, that's your evidence. That's why you said it was good. That's why we said, not you, that's why we said it was good news. Okay, your final statement is there anything else you want to tell us? While the growth rates are slightly lower in 2013 compared to 2012 than they are in 2012 compared to 2011, the company shows strong performance in the 3 years. So this last sentence is like the icing on the cake where you're telling me, I get it that the growth rate is going down, but it's still really high. So that's good news. Okay. So very dry analysis. I get it, but I want to get you guys thinking in terms of calculating growth rate and recognizing a trend. So obviously with net income and net sales, we want that trend to improve and go up. So, all right. Okay, that is pretty much it for test review. Shani, do you have other questions? You want to go over your own monopoly, so I'll stop the recording for that. And then Datev, do you have any last minute questions?
Nope. I think I'm ready for the test. Thank you.
All right, thanks for dropping in, and I will try to post this before I go home.
All
Thank
right.
you,
Bye-bye.
guys. All right, take care. Bye-bye.